Historically, this type of price action is telling us that there's a constant accumulation of, in this case, contracts of silver. People are accumulating silver. Eventually, as long as the momentum and the accumulation continues, then we're going to see this eventually break to the upside. And then then you get a huge new leg to the upside where all the people who sold her through this phase, they all want back in to catch up, and they're the ones that drive the price higher.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Yeah, thanks for having me, Elijah.
Definitely. Now, the last time we had you on, you were talking about how there could be a rally in the dollar that could put pressure on gold. And we definitely saw that. And although, last time we had you on, there was a breakout in gold that seemed pretty promising, you did say that we would see probably consolidation for a little while. So where do we stand now, and how does it, is there any, damage to the gold chart because of this pullback we've seen in the last couple weeks? Or really, where does gold stand right now?
Yeah, gold and silver and miners, they were having a really nice move up until the US dollar decided to have this great big strong pop and rally. But it wasn't just the dollar that really caused the move. We were talking about how all the precious metals were pretty much at resistance. They had all had a nice move. They were pushing some really significant areas where sellers could step in at any point. As soon as traders get a little nervous up at those levels, they were going to pretty much hit the sell button and kind of get out because it was resistance. The dollar happened to be at a support zone. And so as soon as the dollar started to bounce and rally, it created enough fear that a lot of people ejected out of their short-term speculative kind of precious metal trades, and the price just collapsed. And so there was some damage done to the gold and silver charts. When you look at them, I think it's going to take a month or two to recover from. We'll see how long it actually takes and the type of chart patterns that the gold and silver start to form. But there was damage done. It took the wind out of the sails, and now it's going to be delayed. I think this breakout, we were so close last time you and I spoke, but now it's kind of pushed, another month or so, kind of further again.
Yeah, this is really spurred by the rally in the dollar, it seems like, and really a move into there had been a move into safe havens, but that kind of died down a bit because of the rally in the dollar we saw.
Yeah. So, we did see that. I mean, a lot of money was moving into the safe havens. We had been seeing utilities do well. And more importantly, we saw bonds really go from a big downtrend over the last year to putting in a bottoming formation. And now the bond market is actually in a new uptrend. And typically when we see the bond market, which I consider kind of the safe haven, when the stock market collapses, bonds actually kind of hold up or go up in value, whereas precious metals can still get pulled down to some extent. But when the bond market puts in a rally and starts to go into an uptrend, that to me is a really good sign that we're probably going to see gold continue to move higher over time. I think gold was just a bit of a crowded trade, a wave of sellers hit, and it collapsed very quickly. But overall, if the bond market's going up, that means there's fears slowly creeping back into the market. Investors and traders are going to start to accumulate precious metals again. And so I am still bullish on gold. It's just kind of got delayed a little bit. But the bond market's telling us that people are going to continue to be buying gold because fear is slowly rising in this market.
And what factors or economic factors do you think is causing that fear in the market?
The stock market climbs a wall of worry. It's had a really good run last year, and this year it's been a pretty rough go. When you look at the NASDAQ or the Russell 2000, they've really traded sideways really since January or February, very choppy. And so that starts to put doubt in people's minds of maybe this market's losing momentum. We haven't really had any big leading sectors muscling their way up and getting people excited. So we're kind of just stuck in this kind of doldrums. And when investors and traders get bored very quickly. They like action, right? And so when we get into this kind of dull type of market, they start to give up, they start to get worried, they start to overthink things, and they just start to move to defensive plays like bonds. So I think it's just kind of boredom And it's making the delay in the move higher for stocks has got them just kind of thinking that maybe I should get a little more defensive. And so that's just kind of, I think, what's unfolding there.
Now, with respect to the gold and silver charts, if you wanted to kind of share gold first and kind of some of the damage that we've seen in your outlook going forward.
Yeah, let's take a look at the gold chart. So this is the daily chart of gold. And if we just zoom back, you can get a picture of where we are. So gold's had this series over the last couple of years of a rally, a bull flag. We had the COVID kind of drop and pop. And then this next huge bull flag wave. Well, over the last few months, we've seen a very strong move in gold. And when we zoom into the price action, we had kind of the US dollar have this huge drop and it broke down. It came right down to a really significant support zone. If we were to just kind of box in this type of price action, you can see it's a fairly significant level where we had a low here. We had more or less a spike low. We've had lots of price action trade through here. We had a big bull flag through here. So there's lots of volume in this blue box. And that's the first level where it's going to find support when it actually drops to. And so now we need to figure out if it's going to put in a bottom and start to rally and potentially trade sideways and build some launch pad before it goes much, much higher. But if the US dollar breaks down, we're actually going to see gold collapse very quickly and could go to around 1650 and break these lows, create a huge wave of panic. And when it breaks these lows, it's going to send it down to 1650 or so, cleanse the market, and then I think it would put in a very significant bottoming formation. And when you look at this drop in gold and it just refuses to bounce. There seems to be a lot of sellers still holding it down. When we look at the US dollar to see what it has done in the same time frame, it has done very much the complete opposite. It had a rounding formation. We're talking right across here saying if this pops, it's going to potentially go way up here. But we've had this strong pop, and that's where gold broke down. And now it's forming this little bull flag. It's a high momentum pattern, both on the dollar, pointing to much higher prices, and the gold chart is a high momentum move to the downside. So if the dollar gets traction and starts to take off, this little consolidation here is very similar to this consolidation. You get a strong oversold bounce from a support zone, takes a bit of a breather, and then it has one more squeeze up. And so if we get that squeeze, it's going to put that pressure on metals. And so that's kind of the short-term view for what gold is kind of doing right now.
And you said this pullback is kind of delaying a move higher for gold for a couple months, or could it even be further than that in your opinion? Yeah,
it could be further. When you look at this big chart pattern, this was a multi-month rally, and it's given back pretty much half of that rally from this recent move. This could take, multiple months to work itself out. Just looking at these oscillations, there's 1 month, maybe 2 months, it could take a long time. Like this is a huge kind of a multi-year pattern, right? So nothing is really going to happen imminently. These big patterns mean that they take a long time to play out. And the fact that we just had a big kind of breakdown and a lot of damage to this chart, just for it to get up back to this level is going to take quite a few days for it to get up there. And then it's got to build some type of bullish pattern and then break out of that to really kind of confirm, hey, okay, now we're making some real higher highs and in higher lows, but we could be more than 2 months for sure. It could definitely drag out.
I know a lot of people are very bullish on precious metals going to the end of the year, but in your perspective, could this last as long as that?
It could. I mean, when you zoom out on the gold chart a lot further, let's go way back here. These patterns can take a long time to play out. Like you look how many years it took for this last basing formation. And even this one up here, this was a very, very long pattern. And long story short is if we were to look at this gold chart, this kind of rally that we saw back here in 2012, where we had this massive bull flag, it consolidated. This massive rally feels a lot like this type of scenario. And hopefully, I feel as though we're in the start of a new super cycle. So I don't think it's going to resolve to the downside. We may sell off a bit and continue to build a big base here, and it might take more than this year. It could drag out. But overall, we are kind of in this new super cycle for commodities, a weak currency, US dollar, and this should eventually resolve to the upside, and we should be like 2,700 in gold. But you're right, this could drag out to the end of the year. The end of the year is not really that far away. 6 months is only a little bit here on this chart, and we would only be, at these blue lines. So, yeah, it's going to drag out. The markets always move a lot slower than you anticipate. It drags things out. It'll bore you out. If it doesn't shake you out, it'll wear you out. You'll just give up on it. Be like, yeah, this is like dead money. I got to go find something else. Everything else is popping and dropping, and here I am sitting here in a dead asset class, right? So that's what the market tries to do. It tries to either shake you out or it'll just wear you out, and you just move to where the opportunities are.
So what are some of the fundamental reasons you think that gold is in a new super cycle right now?
Well, when you look at the valuation of other commodities or other assets, compared to commodities in general, like you look at the stock market valuations, you look at real estate, they are back up at crazy levels that we saw back in 2001. And commodities back then were the most undervalued kind of asset out there. And that's the same scenario we saw last year. We saw equities, real estate being at those extreme levels again. Commodities in general were at like 50 or 80-year lows in terms of their valuation. So when money all swings into kind of a couple key assets and the whole world's doing it, it's usually getting close to coming to an end, right? And that's when we should see commodities come on this upswing. And we've already seen gold do that. We've seen gold miners and silver starting to come to life, but we still have like 3 to 5 years of a potential major upward swing. But again, this is a huge cycle. These are big multi-year patterns, and they require time to actually unfold. So it's just a valuation standpoint. When everyone goes in one direction and everything's way overvalued, eventually it's going to come back. Elasticity will bring it back to the norm, probably go the opposite direction. Eventually stocks will be undervalued in real estate, and commodities will be overvalued. So it's just a constant, elasticity, overbought, oversold condition over a multi-year period.
If we look now at the silver chart, what kind of damage, if any, was done there, and what is your outlook for silver?
Sure. Yeah. Okay. So silver, let me just zoom back a little bit here. We look at the big picture. So this goes all the way back to 2006. Silver has got the better of the chart patterns. It's had a very strong rally. It's been consolidating in this pattern with a series of higher lows and kind of sideways or lower highs. This is a very strong pattern. In fact, it's actually a very similar pattern that we saw back over here in 2009 and in 2010. After it had kind of gone through a bear market correction, we've gone through this whole bear market correction. It's pointing to a huge explosive move, which is why so many people are excited about silver, as am I. But it is at the lower end of its range when you look at this chart. So it still has a lot of work to do to get to that upper end and then eventually break out and start to move higher. But the chart is looking really, really good. When you look at it, zoom in on it, you can see here, each one of these vertical lines is a month. So we're still looking at several months for it to kind of probably work itself to the end of this apex. Eventually it's going to break one way or the other and go up. And that's why I like silver. It's got the cleaner of the chart patterns, which typically isn't the case. Usually silver is a pretty gnarly chart. It's all over the place. But I like silver a lot. And I think, not as much damage was done to the chart on silver, in my opinion, just because it continues to make the series of these higher lows. And as long as it doesn't break down and break below this, then it's definitely got a much stronger chart pattern. If it breaks this, which there is potential, if the dollar rallies, we're actually going to be going right down to $24 an ounce for silver very quickly. Hopefully it'll hold that level and then hopefully work itself back up and break to the upside. But if it breaks that level, then we're probably looking at an extended period for silver to kind of repair itself and change that momentum back to the upside.
No, I think the interesting thing about this chart, and we talked about this with Gareth Soloway, and we pointed out how it's actually that channel is narrowing. So it's 100% certain that silver is going to either break out to the upside or break down, because it just has to, because the channel's narrowing.
Yeah, the pattern is a bullish pattern, so it should break to the upside. But as we all know, precious metals are a little manipulated, so who knows which way it'll truly break. But this chart pattern, the momentum, I mean, we are in a bull market. It should break to the upside eventually and take off.
Why, in your perspective, does it seem like it's more likely to break out to the upside?
It's strictly because of price action. I mean, this is historically, this type of price action is telling us that there's a constant accumulation of, in this case, contracts of silver. People are accumulating silver, and it's had a huge run up. And all of this is just a profit taking zone. People who are happy with their profits are selling their contracts to people who are interested in buying it and holding it for the next move up. So you just have to let all those people change hands. From all the contracts go from people who are nervous about it falling down or falling in value, and those contracts land in the hands of new people who are like, oh, I'm excited. I think silver is going to $40 or $50, and they're going to hold on to it. So we just need to let it kind of work through this area. Eventually, as long as the momentum and the accumulation continues, then we're going to see this eventually break to the upside. And then then you get a huge new leg to the upside where all the people who sold through this phase, they all want back in to catch up, and they're the ones that drive the price higher. So it's just the way the pattern is. It's technical analysis, which is my kind of passion and my focus. I don't look too much into the fundamentals because they can really skew where you think price is going to go, because a lot of times things should go higher and they don't, or a lot of times things should crash and sell off because of bad fundamentals and things like that, and they go the opposite direction. So I don't follow the fundamentals too much.
What kind of a move higher would this look like if silver was to break out above? Sure,
yeah. If silver was to break out above, we can quickly draw a quick line on here. Usually got Fibonacci extension, which tells us the momentum of this move. So the first rally, more or less $39, $40 to the upside. So there's some pretty good upside potential from where we are right now. Obviously, that's about a 50% upside from there. Silver or gold is much less. But overall, I like this. I like this pattern, this setup. It'll naturally want to find, the way Fibonacci works is it's naturally going to find resistance around this 618 level, meaning whatever this first leg up was, when it rallies 61% of that distance, which is this orange line, if it pauses and pulls back there for a little while, then we almost always see the 100% measured move reach later. So it's when it does get there and pause, when it starts to break again to the upside, you got a very high probability of it hitting this next $40 level. So it's kind of a little check and balance to get a feel. This is also the first level you usually want to pull some profits or tighten your protective stops. This is also, if it doesn't get through there, this is where it's going to reverse and crash back down and suck away all the potential profits that you had. So this is where position and risk management comes into play to manage positions. It's not about getting in here and selling it all right here. It's about getting in, trimming positions, moving up your stops, trimming more positions, and then, potentially exiting and then waiting to see how things correct after that. So trading and investing really comes down to managing risk and positions. It's that's like 80% of really the job. In terms of throwing a dart at the board, I mean, if you've got good risk and position management, you can still make money with not much of a strategy if you're super diligent on protecting your capital.
All right. Well, Chris Vermeulen, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where our viewers can find you online?
So they can find me at thetechnicaltraders.com, where I share my trading insights every morning, a short video recapping, kind of like what you and I just did. I show what happened yesterday, what's happening in pre-market, and how it's going to affect any positions we have. And then, of course, any trade that I put on, I share with subscribers. And the video is super educational. You get trade alerts and very, very kind of timely. It allows you to learn while you kind of earn money trading ETFs. And I focus on ETFs because they're kind of, I'm catching tides and these waves in the market. I'm not so much into the individual equities at this point. I'm just focusing on the ETFs.
All right. And if people would like to hear more of these interviews with you or any of our other guests, they can go to libertyandfinance.com. In the left-hand corner, sign up for our free newsletter. Chris, thank you once again for all your time today.
Yeah, thanks for having me. Always a pleasure.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.